What is up, everyone? It is Derek Vandelinder here, and in this video I'm going to teach you how to use Bollinger Bands. Now, the way that I used to use Bollinger Bands was more as a area of showing me a reversal, or I would be able to tell if we were in a breakout that would continue, or if we had a potential reversal in this move. Okay, so going forward, you're going to learn a lot in this. Some people might love Bollinger Bands, some people might dislike them. When I used to scalp the 1 and 5 minute, I don't think I could have traded the way or as well as I did without Bollinger Bands. They taught me a lot about what the actual market's doing. And yes, I do still use them to confirm on certain patterns. So let's get started here and let's get to learning. Okay, so welcome to the Bollinger Band video. In this video, you should have everything you need to know about Bollinger Bands, okay? So, what are Bollinger Bands in the Forex market? So Bollinger, John Bollinger, he's the one who created Bollinger Bands. He's a longtime technician of the markets, developed the technique of using a moving average with two bands above and below it. Okay, so unlike percentage calculation, from a normal moving average, Bollinger Bands simply add and subtract deviation calculation. And this is what John Bollinger came up with. I actually have a post that I made about 4 years ago or 3 years ago on Facebook that said I was actually thanking John Bollinger for changing my life. It was pretty cool to see because he actually did in a way totally. So going forward, standard deviation, what is that? It's a mathematical formula that measures volatility, showing how the stock price can vary from its true value. By measuring price volatility, Bollinger Bands then adjust themselves to the current market conditions. So they do change throughout the market conditions, okay? So this is what makes them handy for traders, is because they evolve with the market, okay? So Bollinger Bands consist of a center line and two price channels, both above and below that center line. So the center line is an exponential moving average, and we're going to learn about moving averages later on in this not in this video, but in a video down the road. The price channels are standard deviations of the stock being studied, or in our case, the currency pair. These bands will expand and contract as price action of an issue becomes volatile, okay? So as the market becomes either more volatile or we see kind of sideways movement, you'll see the bands either contract or expand. And I use that in a specific way that I'll be teaching you throughout this video, okay? So I use Bollinger Bands to try and understand potential areas of reversals. So through the time I started trading until now, I've always seemed to just understand Bollinger Bands, okay? I started to notice different movements with Bollinger Bands that tend to really help me understanding these potential areas of the market where they may reverse. So what I did, and this is back in I think 2015 or 16, I put 3 series of bands together. They're all 34 period, but 3 different deviations. So we got the 2.0 deviation, 2.5 deviation, and 3.0 deviation. I noticed that when the bands squeeze together, there's a better chance of a breakout. Now, I also noticed that when the market trends between the 8 moving average and the 2.5 Bollinger Bands, that the market will just continue in that manner until we see something on the higher time frames that's telling us that the market could potentially reverse. I also noticed that when the market breaks far outside the Bollinger Bands and we have a shark fin or something that may imply that there's a potential area of reversal, that the market will tend to do it a lot more as it breaks outside that Bollinger Band. Because when it's breaking outside that Bollinger Band, especially when we have confluence in the market, it means that it's out of its range, okay? I also noticed that when Bollinger Bands are spread far apart, so when the 2.0 deviation, 2.5 deviation, and the 3.0 deviation are spread far apart, that the market will just reverse off of the 2.0 deviation. So that's why I used Bollinger Bands, because they told me stories of what the markets could potentially be doing along with my trading patterns, okay? So, Bollinger Band period and deviations, like I was saying in this last one, I use the 34 period Bollinger Bands. And we have a 2.0 Bollinger Band, 2.5 deviation, and 3.0. So here we have it on our chart right here. This is the orange one, which is, or excuse me, the green bands is the 3.0 deviation. So this band right here is the 3.0 deviation right there. Now, I'm sure you can guess the 2.5 is the black band. And then, of course, the orange band is the 2.0 Bollinger Band. So the squeeze is a sign of a potential breakout in the market. Typically now, the tighter the squeeze, the larger the breakout. Let's show you an example right here. So we have the squeeze. Now I want you to notice on our chart right here, bands are wide apart. The 3.0, 2.5, and 2.0 are all spread apart in this region right here. Now, as you see, they start to come together and squeeze together. So when that happens, that means we have potential breakouts occurring that could be happening soon in the market. Now, if I were to look at it in this case, we had this contraction in the market, we had the squeeze, and market took a tank. You can't see because the candles are not on the chart right now, but I just wanted to get you a grasp of what to notice with the actual Bollinger Bands. As you can see here, we have a squeeze here as well as market reversed up. Okay, so we had a bullish move after we had our finishing move down here. So that's the squeeze, and this is exactly what happened. We could not break this area of resistance in here. The market was all squeezed up, and we broke this previous low in here. And as that happened, the market just continued to drop. So that is how I use Bollinger Bands to detect if, hey, we're going to see a breakout happen, or we could see a potential area of reversal. Okay, so with this, we had the resistance not being able to be broke, and then obviously fell. Okay. Again, here we had the squeeze, and then the market continued to rise. So that's just kind of how that part of the squeeze, that's how that works out. Okay. Now, wide Bollinger Bands, and this is what I mainly used Bollinger Bands for when I first started trading, is being able to detect how wide the Bollinger Bands are. And the wider they were, I noticed that the more likely they were to reverse off of the Bollinger Bands. So when I see wide Bollinger Bands, I often see a potential reversal. Okay, the wider the bands, the more likely they are to reject off the Bollinger Bands. For example here, notice how far apart all these bands are throughout this region right here. They're pretty tight together. Now, as we see it start to drop further, bands are still constricted together, and we see them start to really widen out right throughout here. So if you look at these three bands right here, notice how much wider they are than every other region on the market. Now, when this happens, this is telling us that, hey, this is a potential area we could see reversal, okay? But you only want to use this with our other confluences in our market, okay? So as you can see here, this is exactly what happened. We had this major shark fin, which you're going to be learning about later on in the course. We had this major shark fin play out, then we came down and made a divergence, which we're also going to learn about later on in the course. Now, as this divergence happened right here, the bands were so wide, it's telling us that the market's going to reject that area, and that's exactly what it did, okay? So you kind of have to take it with a grain of salt. You have to be able to use major areas of confluence to determine if what the bands are telling us is going to actually play out. In my first 3 years of trading, this is literally all I used, and luckily, I had a good eye for being able to see reversals and whatnot. But now I've got this, it's been years in the work, but I've got it figured out to a T how I can potentially multiply my gains by the Bollinger.
Be pulling up. Remember they said I'm not good enough. I took all the energy, turned it to greatness. Now look at my life, man, it's looking amazing.
That's right. So this is a very good example, and this is something that could help any trader, I think. I call this the never-ending trending bands right here. So this is what happens when the bands are at a slight tilt up, down, or up or down, okay? And the market is moving from the 8 moving average, which you're gonna learn about later, to the 2.5 deviation Bollinger Band. Now, as it's just ranging and slowly climbing up or slowly climbing down, that market will just keep going until we have a area on the higher time frames that's telling us this is a potential reversal area. And I'm going to show you examples of this. But if you ever tend to see in the market moving like this on the next slide, make sure that you do not try to counter that trade, meaning try to short the market when it's climbing or buy the market when it's dropping, okay? Because this thing will continue to just keep dropping or keep rising. I've seen it since 2015, the same pattern go over and over and over again. So what we have here is the slight band tilt up right here. We have our 8 moving average, which is this gray little line right here, as you can see. Now we have the 2.0, 2.5, and 3.0 Bollinger Bands. Now what you're gonna see on this next slide is you're gonna see the candles just moving between the silver line or the gray line right here between this black 2.5 deviation Bollinger Band. And when this happens, what you wanna be doing, because it can happen on any time frame, is looking for potential areas to go with the trend in this case. So we wanna be looking for our hidden divergence moves, which you're going to be learning about, but you want to be looking for the trades that are going along with these trends, okay? So let's say we have a move like this happening on the 4-hour time frame. What we will want to be looking for is on the lower time frames, areas where we could potentially get in the market and ride that trend, okay? So as you can see here, market is literally just bouncing between the 8 moving average and the 2.5 deviation Bollinger Bands, making some slight moves back into, or retracements back into the market, but just continues to just climb. And this is why I say you got to stay out of these moves and you got to look to ride the trend with these types of moves. And oftentimes what you're going to be finding is you're going to be finding moves, potential buy moves off of like the 8 moving average, or maybe a little bit past the 8 moving average. But what they'll be is they'll be like either a shark fin or a hidden divergence move on the lower time frames, okay? So breakout Bollinger Bands. Now this one's a big one because this one will tell us when the really big the really big moves are going to happen, and the ones that you should really stay away from and look to never counter trend these types of trades, okay? So we have a massive breakout, and these happen often, and they often will lead to a false shark fin. And the shark fin you're going to learn about later, but this move you need to be aware of, and you can come back to this video later on, but you need to be aware of what's going on within the Bollinger Bands with this massive move. Now, especially if there isn't any confluences in the market, then you 100% need to stay away from these moves. Now, they will work out occasionally, the shark fins, but you want to make sure that we have confluence in the trade before you're going to take it, okay? So this is what I'm talking about here. We have this massive trending move up. Now, we've been trending up for a long time now, and we start to see this congestion between the Bollinger Bands. The Bollinger Bands are all squeezed up. The higher time frames are telling me, we're done with this trend. So what we're gonna see here is the market to start to fall. Now, the thing is, people like to get caught up in these moves. Especially after these major trending moves, and they start to see like a massive candle down or something, They love buying those. And what will happen is it's just a reversal on the higher time frames. So that reversal in the higher time frame is just going to keep dropping. So when they're buying maybe the 4-hour move right here on the daily time frame, that's its reversal point. So it's just going to keep dropping. Okay, so we have this major uptrend and then this squeeze. We're going into this squeeze mode right here. Now, this is what you really need to watch out for. When the bands flare out like this, you have got to stay away from trying to counter trend this trade, meaning try to buy this trade here. Notice how all these bands are so congested together, and you never want to counter trend trade a higher time frame move. Like, this could be a daily reversal, meaning that market could continue to just drop. Okay, now if you do get in this move, you're following risk management, you're going to lose your 1 to 2% in that trade, and it may happen. It happens to the best of us, and that's why we use risk management. But just be aware of what's going on the chart when it's looking like this. Okay, you want to use proper risk management, and you want to make sure that you're following some sort of confluence in the market. And then, as you can see right here, we have all this congestion. Now, bands are starting to widen down here. Now, when they start to widen like this means that the market's starting to slow down a little bit. And as it does, you may see the reversal, you may not, but that is exactly what that means, is market's starting to slow down, and either we're going to see a retracement and then continuation of the trend, or we can just see a full-on reversal going with the trend in this point. So that's what you need to be aware of with Bollinger Bands. When I'm using them, I'll show you exactly what I do on TradingView because I don't have them on my chart, and I'll show you exactly what I do with MetaTrader 4 because I use them differently with each program. Because MetaTrader 4, I really only use Bollinger Bands if I'm trading the 1 and 5 minute chart. I always have them on my chart. But on TradingView, you can't really see what's going on with Bollinger Bands as well as you can on MetaTrader 4. So take note of that. Now what we're going to do is we're going to head over to TradingView so I can show you kind of examples of what's going on with Bollinger Bands and how to take them on and off your chart in TradingView. And then we'll go over a little bit more examples on MetaTrader 4. Okay, so I'm on TradingView right now, and what we have pulled up is USD CHF, and I just kind of want to show you examples of how the Bollinger Bands work here. Now, in ranging markets, you'll see a lot of rejection off the Bollinger Bands. As you can see, a ranging market, which is a sideways moving market, you'll see the market bounce off either the top Bollinger Band or the bottom Bollinger Band, like we can see here. Now, right here, we have kind of flat and wide bands, and especially in a ranging market, you'll see the market reject off that area. So let's say we have something like that on lower or higher time frames, and we have a nice move on a nice support area, and it's touching our Bollinger Bands on the 4-hour time frame. Okay, so maybe on the 15 or the 30 minute or one of those time frames, we have a shark fin or divergence or something that's telling us this may be a good buy. All I use the Bollinger Bands for is an extra added confluence to, let me know what's going on with the Bollinger Bands, okay? So as you can see there, we move sideways, and then all of a sudden we start to slide down. Now, this is a shark fin right here. You're going to be learning about it later on in the course in detail. But this is an example of what I was talking about when the candle is outside the 3.0 Bollinger Band and we have a nice shark fin that has confluence so that it's a smart trade, because a shark fin without confluence isn't a smart trade, okay? So we're going to pretend that we looked left, and this is a nice area of confluence right here. We see this massive candle outside the 3.0 Bollinger Band with a beautiful shark fin down here. Now, when this happens, the market reversed, and this is just giving me a little inkling that the market could potentially reverse by this massive shark fin and the candle outside the 3.0 Bollinger Band, because what that means is the market's out of its range. And as you can see, the market reversed right after this shark fin right in here. The shark fin played out beautifully and made a very beautiful move, okay? So that's how I use my Bollinger Bands. I use my Bollinger Bands to determine if the market could be potentially gonna go reverse at some point, or what it may do. Now remember, like I said, if the market's ranging between the 2.5 or the 8 moving average and the 2.5 Bollinger Bands, I'm gonna stay out of that trade. And let's go back and see if we can find one of those. So here's a perfect example right here. So the market broke through the 200 moving average in this instance right here, and then it did not break outside the 3.0 Bollinger Band at all. It just kind of chilled in between the 2.0 and the 3.0 Bollinger Band. Now, I'm never going to counter that trade in that instance, unless, of course, we have a higher time frame confluence that's telling us the market could potentially reverse. But that's exactly what I look for in that instance. And the thing is, this market rejected right off this area of resistance right in here, just like that. But you would never want to short the market in this region. And some people get carried away and do, because they get carried away with this false shark fin here. So that's what you really got to pay attention to. The trade's got to make sense, okay? And if the trade doesn't make sense, you shouldn't be in the trade. So that's how I use that. Now, here's another example right in here of wide Bollinger Bands and potential reversals. So what we have here, let me replay it down to this level. So we're down to this level, and that's actually funny because I'm pretty sure this is the example I gave in the previous section. But I want you to take note how wide these Bollinger Bands are in this instance right here, and we have a nice area, or nice divergence in this area. Our first move was a shark fin that gave us a little bit of retracement, and now we're seeing the market reverse again, giving us a divergence move, which you'll be learning about, and it's going to be fun. But that's what I see there. And when the bands get this wide, you'll notice that the market will sometimes not even touch the 2.0 Bollinger Bands, like in this instance. So if we have confluence in here, and you should be in this, and there's a reason you should be in this trade, the Bollinger Bands being this wide gives us another area of confluence, okay? So watch how this plays out right in there. Bands were so wide, it didn't even come down to the 2.0 Bollinger Bands and just started to reverse up, okay? So just take note of that. That's how I use the Bollinger Bands, okay? It is something that you don't need, but it can potentially help you. It definitely helped me. And if you ever want to, have your Bollinger Bands on there just the way that I do it, as you can see up in here, if you look up in this corner right here, I can take these Bollinger Bands off by clicking the eyeball right there. And so it declutters my chart. And I don't like a cluttered chart. So that's why I love trading views, because I can add any of these I want back on or take them off in just a short little click, okay? And I can do the same thing on MetaTrader 4. It's just a little bit more of a hassle. I would have to create another template and then put that template onto MetaTrader 4, but I don't trade or use my charts for MetaTrader 4. I only take my trades off MetaTrader 4, like you guys should know if you watch those videos. So that's that. That's how I use Bollinger Bands on TradingView. Now, I'm not going to go over how to use them on MetaTrader 4 because it's the same exact thing, but you will notice that it might be a little bit more clear for you to see on MetaTrader 4 than it is on TradingView because the way that the chart platform is. So eventually, I'm going to be doing a scalping video on exactly how I use to scalp. And when I do that scalping video is when I will show you how I use the Bollinger Bands on MetaTrader 4. Okay, so Anyways, I hope you learned a ton in this video. I know that there was a lot of information spewed at you, but if you have any questions, feel free just to comment below. I'll try to answer them to the best of my knowledge. Now, you have to take it this way. This is honestly the first time that some of this stuff is coming out of my mouth, because this is all just stuff that's stored inside my brain that I'm finally getting to be able to spurt out to you guys. So a lot of this stuff has never been said from me before, and it's all just been stored in my brain. So it's pretty dang cool. But anyways, if you guys like this video, please like, comment, subscribe, follow me on Instagram, or go to my website, www.tradersociety.com, and just write me a message and let me know that you're liking what I'm providing you. But anyways, the next video, we're gonna have a lot of fun. I believe it is moving averages, and you're gonna be learning a lot. Going forward, we're gonna see you here in a little bit. I hope you're enjoying these videos, and we'll see you next time.
Be pulling up. Remember they said I'm not good enough. I took all the energy, turned it to greatness. Now look at my life, man, it's looking amazing.